Well, good evening, all. Ira Epstein, and here we are with your financial market review update for the evening of Tuesday, the 16th of May, 2023, 6:30 p.m. Central Time. Okay. So to surmise what I've been writing about for my full subscribers in my research report, and there's a lot tonight. This whole week, I feel like I've written text upon text, really giving solid information and bringing things in a way you can understand it. What happened today is the president nicely, and I want to use the word nicely, said too many cooks in the kitchen. Let's get it down to his staff and McCarthy's staff, the Speaker of the House. Let them do the negotiations here, and then we'll bring in everybody else. So in a very polite way, I think you're done with Schumer. I think you're done with McConnell being in every single part of the negotiation. Behind the scenes, I don't know what happens, but that's where you're going to be. Number two, I think the president is wrong in leaving for the G7 meeting. I know how important it is, but he's the world leader. But number one, he's the leader of America. And he's going to go for 4 days away. And again, he's saying he can be in constant phone contact. It is not the same as McCarthy running over to the White House, Mr. President, we're stuck here, what do we do, over the phone? If you think it is, terrific. It never is. Number two, he'll be distracted. I mean, he is 80 years old and he's going to be with all these world leaders. He will be distracted. Number three, what have they really accomplished? Well, they've accomplished not fighting, but they have not done a deal. This is the 16th. You're supposedly going to be out of money on the 1st of June. How do you get a deal not only agreed to by McCarthy's staff, McCarthy, the president's staff, and the president, bringing it back to Schumer and McConnell, getting their okay to take it to the Senate and the House, and then the debates on the Senate and the House when everybody's gone right now on vacation. They're all leaving, so they're all going to have to come back. And they're going to have to agree to whatever they agree to. And can they get that all done in 2 weeks? Nah. Could it happen? I'll give it under a 1% chance. You got to leave it open that it could happen. I see that. Practicality? Nah. So that's going to leave open some moves on the on the House floor. Well, they'll try to pass an emergency measure. They don't have the votes. They have to get some Republican crossover. And if the Republicans see the crossover, those people are chastised. So I don't see that happening. More likely is everybody can come to an agreement on an extension. 2 weeks, 3 weeks, a month, whatever the heck it is. Give them $100 billion, $150, whatever they need to pay the bills. But you got to now press it. Now is when you got to get things done. The idea is on one side, the Democrats want this to be only for 2 years, whatever they agree to. The Republicans want 10. You have monies at issue. The Medicare, big time. Able workers, what about them with no children, nobody counting on them? What do they get? I mean, it goes on and on. There's a lot of big issues that have to be dealt with. And can you get it done in 14 days? That's my opinion, all right? The market's not disagreeing with me. You were down today, if you look at the Dow, you were down about 350 points on the close. You're up 44 tonight. We heard positives, not negatives. That's all you can rally, because if you dig into it, the reality is, I think, what I'm explaining. If you look at the gold market's got major headwaves now. It's got rising interest rates. If you look to see what the interest rates are doing, they have been moving up to the upside. Did you see the 30-year bond? It's gone back to recent high yields. Yeah, important to look at. All parts of the curve yield have been adding yield. Why? If nothing gets done, who knows how high interest rates have to go to get anybody to buy our instruments on a default? I mean, I don't know what that number is, but I'll tell you this, it's not where you're at right now. It's substantially higher. And that's the fear the market has, that everything comes to a grinding halt all the way through. It is a big issue. You want them to get this done. It's most likely, in my opinion, I could be very wrong on this, going to end up with an extension at the last minute, not a long one, as if the Republicans are smart, not the Democrats, the Republicans, short leash, get things done. Got it? Those in power, the Democrats, hey, let us have more money. It's things as usual. We'll talk to you. We'll get that done. The people in power have the control. Remember that. So it's the Republicans fighting for control, and the control they have, the hand is, do you want to go to default? That's the only thing they have going, and they're going to use it. And they're going to use it in a major manner. So again, it's the Trump statement. Don't agree to anything, let it go broke. Well, to a degree, that's what's going on, but a different face on it. We're trying to get it done. We can get it done. We got to get everybody here. But what he's not saying is, but you all got to come over this way. The good news, and last statement on it, I like that both men, and I am talking about so seriously here, that McCarthy and others said it has to be a bipartisan deal. They've given up on the president. That was, by the way, cutting the legs of the president off. Remember, the president said there'll be no negotiations. That's over. It's now a bipartisan deal. Code words. We got to have a bipartisan. I mean, if you read through it, I've seen this before. It's easy. When you look at the S&P, you're now down for the week, but only 0.25%. You would think with this big decline today that the market's falling out of bed. It's not. It's caught in what I've been telling you each day. You've lost the volatility in the market, but there's no trend to trade. You've got a market that's got lower highs, lower lows. It's fighting at the 18-day average of close. That's why I said there's no trend. As long as it stays under it, you have bearish bias. But it gets enough over it where it's trying to get bullish. But right now, I think the bears for the 24-hour period ahead have control as long as you stay under that 41.36 level. The objective of the market, you have to fall out of bed here 50 points to get down to the Bollinger Band, or you have to rally up to 41.97, 70 points, 80 points to get up to the next resistance point, right? When we take a look at momentum of slow stochastics, there is none. It's just drifting here. So if you had to put a gun to my head, I'd say, hey, you go short 41.36, you risk $1,000. I don't want to risk $1,000. I wouldn't tell my clients to. 41.56.50 on the full size, and you're looking for it to come down, or on this 20 points. You decide, okay? Everybody has to decide what they want to do, but the bears have control, except for this one. The NASDAQ has got the embedded reading. Breaks in it will continue to be bought, in my opinion, until the red line closes under 79. It's at 90. When that occurs, a correction will happen. Until it occurs, no, I contend that the breaks continue to get bought. In the Dow, you went down again, and this is a bearish chart, to the 100-day average and the Bollinger Band. And magically, you've run out of selling pressure there. That's what I would expect unless this deal falls apart. Assuming it doesn't, there's another bearish event about to happen. It's right in front of you. You're about to get the 18-day average to cross under the 100. That's another bearish event, and if it occurs, often it means you're going to take out today's lows. When I look at the macro mini Russell, I still see on TV people saying you got to buy this. Okay, you've been wrong, and you're just going to ride it into oblivion. Lower highs, lower lows, it's bearish. Momentum here is not oversold. You can get another leg very quickly to the lower band if you get some bear news in the market. Obviously, every day is going to be full of news we have to be careful of. Then in the T-bond market, what did you go down to? The Bollinger Band. So we had been fighting a battle, if you'll recall, from yesterday and the day before, at the 100-day average up to the 18. If it let go and you have momentum down, trend down, bias down, if it lets go from here, the next objective would be 129.4. You got there and you're bouncing off of it, but you're still very much in a downtrend. And again, these yields go back and you're rising back into the month of March, as you can see. So all that loss of yield that we had on the longer term has been put back in the market. On the 5-year notes, as you can see, we're coming back into this area of support if we break any further. You have the trend down, you have the bias down. I think the pros will sell the market against the 18-day average, which stops right over today's highs. But would I want my clients to do it when you have an oversold position? The answer is no. Doesn't mean that's not what I think can happen. In the dollar index, how many times do I have to tell you? You're at a key resistance point. The 100-day average in green, the upper Bollinger Bands, and you're overbought. That is not reason to be short, but it's plenty of reason to not be long. And that's what I've said the past 3 days, including tonight. In the euro, it's the opposite. If you get down, which you did here, to the 100-day average in the Bollinger Band, I think the pros come out. What I'm nervous about is, are you going to embed? So you can't include Wednesday because we don't know how we're going to finish. But coming in Tuesday, both numbers were under 20. They were not under 20 the day before. So all you have, even though it looks this way, is an oversold market, not into the embedded status. The British pound keeps failing now and going to the 18-day average and not able to mount anything up or down. The pattern's higher high, lower low, and very oversold. In Bitcoin, the factors fighting gold are fighting the rally in these markets. Now, you do remember for a long time, all we heard is how Bitcoin has tied itself to the NASDAQ, and as goes the NASDAQ, so goes this. And that was this part of the market. Something changed. You don't have to agree with me, but something changed. And I think it's a combination of the Fed continues to raise interest rates. We have seen a litany of Fed members coming out, interviews all over television, giving their opinion. Listen to the code word. Some are saying we should go a little more. Some are saying we've enough. All say we need to see the next jobs report and the CPI data. That will tip the hand. That's what I've been writing in my reports. That's why I said to you maybe 5 days ago or so, I said, I've changed. I've now entered where I'm open to the pause. I need to see those two reports, and I'm hearing this left and right. And that's because we started to see the wobbling in CPI and the jobs. Wobbling isn't a downtrend. But if you go back a couple of quarters and you look what's going on, starting things down, if it goes that way, the Fed will back off and see, does it have enough gravity pull to pull things down and they don't have to push the market down? That's what they'll look at. To a man, I have heard every single one of these interviews. Nobody is saying they're going to cut rates this year. So I don't care what the swap traders think. I care what the members think. They're the ones that matter. In Brent versus July WTI oil, all right, differential closing in a bit, still a bearish market. Pay attention to the fires going on in Canada. In Alberta, there is a massive amount of fires, and it's impacting big flows of oil. So you want to pay attention to that. I write about it tonight because it's getting no press at all. It should be. Number two, we saw the IEA today. If you read through the whole report, they actually think, from what I'm reading here, that supply and demand's fairly imbalanced. They, like I said to you, Russia's a liar. They came out today and they're saying they don't see that Russia even got close to meeting their 500,000 barrel a day decline. Not even close. Their nice way of saying they didn't do it. And what we all have been saying, at least what I've been saying in all my reports, is the world was divided up by OPEC plus. OPEC got other parts, the Asian communities that will buy from Russia, and there's plenty of them. That's Russia's markets now. And that's really what I think took place. As we look at WTI, still under pressure, still in a downtrend. The resistance is 72.80 as I see it in this market. Gasoline is fighting its battle. Remember, it lost its embedded reading, and I predicted go back to the 18-day average, and that's the battle. It is still in a downtrend. In terms of the swing line, it is tonight over the 18-day average, which gives the bias an upshot. If you take out the last rally highs, you open the door for the window of resistance to be tested, which is a combination of 257 to the 255.50 level. And from here, that's a heck of a rally. It's 7 cents. Remember where we're at. You're a week and a half away from the biggest driving day, the Memorial Day holiday. So that's when you're going to see all that. Now, the gasoline's been bought. It's already been committed to the gas stations and so on. But the demand will be to take that gas out of their tanks, then they got to refill. In the natural gas, I'm a little disappointed. I wanted to see it reach for the upper Bollinger Band. There's not a trade pattern here. You have at this point a lower low, higher high. So you put it all together, you come up with ideas, and that's exactly what we do at the Linn Group. All day long, we are writing report upon report on the whole futures market. Now, you don't need to get every report. We can tailor these to give you a free trial of the markets that you think you might like, the sections. Maybe you're an S&P trader, stock indices. Maybe your currencies, maybe your energies, maybe your grains. And the other parts, they're just not of interest to you. We will tailor everything that you need. But we're writing on option trades, spread trades, what's the cash market doing, all different reports on it, graphs galore, showing you what's going on, USDA reports, special reports continually. Every day we have a chart of the day that comes out with our price count. So that's going to be included. I mean, you get an awful lot of research from us for a 2-week period. There is no charge for it. We want to show you what we have. It is free if you're a subscriber of mine with my research. It is free if you have a trading account with us. It is not free otherwise, all right? So it's that simple. How do you get it? You go to iraepstein.com, free offers. You move your cursor to the top up here. You'll see an icon. Grab it. I'm Ira. You have a great day. I'll see you all tomorrow.